Hi. This video has been in my mind for quite a bit, and it's time for me to talk about um, money management and risk and positions and so forth. And I've got this really simple Excel spreadsheet I created, and you can ask me if you want for the file so that it helps you. There's no secret here, only formulas, really simple formulas. And I'm going to explain first on this empty um, cell, these empty cells, how I created it, and then and in the rest of the video, I'll explain how I'm using money management in my personal accounts, which is really just for example, and what I'm doing with Goliath, so that you feel comfortable with it. So the sheet is quite simple. You really only have to fill in some cells, and it calculates by itself. So let's start with 1,000. If I had 1,000 euro account. So if I had 1,000 euro account and my objective was 20%, that would mean that I would need to make 200 euros in the time frame that I defined here. Here I define the maximum drawdown I'm willing to take for it. Let's say 6%, and here we put 0.6. So that means if I have a 1,000 euros account, and my objective is to make 200 euros in a month, my drawdown, the maximum drawdown I want to have or I'm willing to have would be 6%. And now I start defining the trade. So imagine I want to risk 0.5%, 0.5, 0.5%, and my strategy usually gets me to place my stop, let's say 30 pips. That means that I have if I have 0.5 percent of risk, I have 5 euros at risk. That means for this position, for this stop loss of 30 pips, my position size would be 0.02, value per pip, 17 cents. Now this is based on euro dollar. Of course, these values will change depending on the currency you're trading. Anyway, I've got to use some to calculate, and I'm calculating the easiest one. So 17 cents for pip. Now, if my risk reward usually is 1 to 4, if my trade is 1 to 4, that means using 30 pip stop and 1.5% risk, I can have 12 consecutive losses. That would mean I'd be losing 360 pips overall. That's all I can lose. Now, if I want to win and achieve these 20%, I have to make 1,200 pips. Now, these 1,200 pips, I divide by the time that I want to achieve that goal. In this case, I'm using 1 month. So if I have to make 1,200 pips, and my strategy usually gets me a trade of a win of 1 to 4, that means if I get if I had a close to 100% win rate, I would require only 10 trades to achieve those 20%, that 20%. So 1200 pips to make 20%, that would mean in a month I'd need to make 1200 pips. In a week, I'd need to make 300 pips. And now this is where it gets interesting. Daily, if I was going to divide, I had to correct here. Daily, I need 55 pips. Sorry, just let me just get a drink of water. So you need 55 pips. If you want to make 20% in 1 month using 1 to 4 with a 30 pip stop, you need to make 55 pips daily or 300 pips a week. Now, does your strategy allow you to do this? The answer is probably not. So what do? Instead of looking to trade it monthly, you look to trade it in 2 months. So doing 10% a month. I could change this, or I can change here. The objective, I put 10%. That would mean I have 27 pips daily. My objective, 150 a week. Now, that's half of what I had before. And this looks quite easy to achieve. So this is one way of doing it. The other way is if I had here the 20%. Now, if I'm okay with my strategy, I can be risking 1%. Not 100, 1%. That would mean I'd have the same objective. 20, have 600 pips required. Required trades with this risk reward 20. No, I should have changed this. Let's see. And so monthly objective would be 600 pips, weekly objective would be 150, daily objective would be 27. I had to change this cell, it was wrong as well. So I would need 5 trades if I had a 1% risk to achieve 20% goal using a 30 pip stop. Now let's say I use a 50 pip stop. This should have changed. Did it change? No, it won't change until I get some more value. So let's say I got a 50 pip stop and I'm trading a 1 to 5. That means I need 4 trades to achieve this goal. So can you do 4 trades a month to achieve 20%? It's quite easy. 1 trade a week. That would mean 1 trade a week using the weekly range, achieving 250 pips. If you're not in the range, that's quite easy. So for my plan, I played around with this spreadsheet, and because I have several accounts, I'm looking at 4 different strategies according to what I want to trade. So I have one really aggressive demo account, which you can look at on the graph. It's made 500 and something percent since July or June 10th or July 10th. Probably June 10th. Yeah. So has made 500% in 3 months. So here I have now a little over 30,000. My objective is quite high, 40% a month, which I have been doing more than that. And because this is really aggressive and it's a demo account, I'm willing to have a higher drawdown. And I have here 2%, 1% of risk, but that's not true. I usually trade more than that. And usually the objective is higher than this. So the account went in 3 months from 5,000 to 31,000. So the risk here using these parameters would be 900 per trade. Position size would be 225. Value per pip, $22.50. Risk reward here, I usually take partials and move stop, but say I can get 1 to 5. This means to get this drawdown, I may lose 6 trades in it. If I lose 6 trades in a row, I'll get to this, not here, to this drawdown. I may lose 267 pips, and I have to make 267 pips. Now this doesn't look very, one should be double the other one. Let me pause this and see why it's not. Okay, I found the mistake. So here I have, so that's it. I changed this as well. So 267, objective 533, trades require 2.5 to achieve that goal. Of course, this risk is quite high, and that would be monthly and daily objectives, weekly objectives. Now we get to the live accounts. So this is one of my live accounts. I have 2,500. My objective is 20%. I will allow for 5% drawdown. Risk per trade is 1%, 40 pip stop. Risk is $25 on this. Position size would be 6 micros. And I will need 4 trades to get to this objective, which means I'll need 800 pips a month, 200 a week, 36 pips daily. Another live account I have, which I trade similarly. I have a higher objective. I have a higher drawdown limit as well. And the strategy is similar. I trade more on the 1 hour. My trades are just searched on the 1 hour chart from the monthly to the 1 hour, and not on the 15 or 5 minutes. So here my monthly objective is 1,200 pips, and weekly 300, and daily 55. But because I'm trading off of the 1 hour, I'm looking for the weekly range, and trying to get these 300. Now, 300 pips in a week is maybe not possible in one pair, but if you're looking at 2 or 3 trades in 1 week and you get most of the weekly range of a couple of pairs or 3 pairs, that's pretty possible to achieve. Now, the last one is the Goliath account. This account, I'm trading other people's money. So I have a smaller drawdown limit and I have a smaller objective. Though if you follow the charts, the objective has been monthly over this. The account is over 100 and something percent in the same 3 months as the demo account. I did go through a big drawdown after making it to 280%, then it went down. So that's why I created this Excel to define the risks for this account, because I may allow my personal trade accounts to have some drawdown, but I had, because here I'm trading for other people, I had to define this, and this is why the video is being recorded, to explain to new people coming in how the trades are being selected and how the money management is. So let's say with the 2500 account, my objective is 10%. Here, in fact, so objective 10%, maximum drawdown 5%. This objective month doubles this money, more than doubles it by the end of the year. More. Okay, so you see here, I introduced here a small chart below. So if we're doing 10% a month consistently throughout the year, the 2500 from the start end up by December to be almost 8,000 euros. That's a 313% growth. So it might not look as very good, mostly for those that were in the beginning of the account, where it grew 20% a week in the first 2 months. But 10% is great, and if you get by the end of the year with 300%, that's amazing. So this is the strategy for Goliath. It's 10% objective. Of course, some months we will have higher risk per trade, usually 1%. Stop placement between 30 and 50 pips. So I dropped in here 40 to be the average. The risk will be 25 on the first trade, and then as we gain a little, the risk will grow a little bit, and position sizes will grow, and value per bit. Of course, this is for a static account, and the account is never static. And so I'm looking to make 400 pips a month, 100 pips a week to achieve these 10%. So that's quite doable. And though I'm defining this as a low objective, because I don't want to create false expectancy of with those that want to join the fund. Most likely will be close to 20% a month, which means 800 pips a month, which means that I don't know, in 4 or 5 trades we can a month we can do that. So this is my objective for the fund, the risk parameters, and what you can expect from joining Goliath. So if you want the file, let me know, and I'll create a little piece of file with this, just with this bit. You don't need the rest, and then you can try and figure out your strategy and what you want to do and how you want to money manage your account and risk, and mostly define the objective, because if you don't have the objective, you're just trading to gain, and that has no limit. How do you know if you're having success or not? Is it because you made $10, $100, $1,000? How do you know you can replicate that amount you made? And this helps you define objectives and adjust your strategy so that it's possible that if you're scalping and you're making 10 pips a day, you got to reevaluate these parameters here in order to achieve your goal if you have a higher goal. So if you want this, let me know, and we'll find a way to make it make you get it. So I hope you enjoyed the video, and that was insightful. Bye bye.